Mahindra Holidays has decided to tweak its strategy. The membership-based resort chain is now focusing on digital and referral systems to build on its base. They are focused on adding the right kind of members. So what's prompted them to change course, and is it yielding results? Will it yield results if not already? Kavinder Singh, the Managing Director and CEO of the company, joins us right now to talk about this in greater detail. Mr. Singh, good morning and thank you so much for joining in. This is Neeraj here. What's happening over the last 6 to 12 odd months, and how is this small change of course or alteration of course, if I can use that term, going to benefit Mahindra Holidays over the course of the next 1 to 5 years?
So one of the reasons we have taken a decision to get members who are able to pay higher down payment, as you know that we sell our memberships on EMIs, we have found that people who are able to pay higher down payment are predisposed for also enjoying the lifestyle that we promote in terms of spending family holidays at our resorts and also spending their time on activities at the resorts as well as the various food and beverage offerings that we promote in our resorts. So we believe if we have to maximize the member lifetime value with us and they have to really enjoy, they must be in a position to look at this product as an essential product and therefore commit upfront higher amounts, which will help us to also know that the commitment is for real. And as you can see, that our cash balance, which used to be just 2-3 years ago at about 15 crores, now we are at 470 crores. In fact, in last 1 year, we grew by about 200 crores our cash balance. So we believe the strategy is working. We believe this is helping us get members who will enjoy our proposition. And as you know, our proposition itself is moving towards creating an experiential ecosystem, which is about not only holidaying at 7 nights, 8 days at any of our resorts in Mahindra Holidays, but also the experiences that we are creating, city-based experiences, curated vacations, cruises, etc. So we are making our brand aspirational, and this is in line with that.
So, well, if I just look at what's happened since you changed course, I think Q2 and Q3, there was a correction in membership additions which revived, or at least has shown revival in Q4. So we know those numbers. While I wouldn't want you to talk specifics because your results would be coming out, but can you just give me a glimpse into how the April, May, June quarter has been in terms of membership additions?
So we normally do not give forward guidance, and all I can say is that our strategy is on course. And we are obviously seeing significant amount of momentum in terms of our resort occupancies. As you know that even resort revenues over the last few years have been growing at a fairly high rates, and we are seeing the momentum in terms of occupancies as well as the resort revenues. As far as member additions are concerned, the strategy of looking at members who would be able to look at higher down payment, lower EMI tenures, and also who will be able to enjoy our proposition is being pursued.
Interesting. So do you believe that this, when you mentioned that the strategy is yielding results, do you believe that this net cash balance that you're talking about, I think 210 crores, if I'm not wrong, as you mentioned, in the last year gone by, this will only inch up, or will you at some point of time start utilizing this in order to expand? Because I see that you have planned to add about, what, 400-500 rooms over the next couple of years.
Yeah, our strategy to increase our room additions is on track. If you know, in last year, we opened our 50th resort at Naldehra, which was about an investment of about 100 crores. And now we have 500 crores capital expenditure plan on the way. We do expect at least 2 resorts to become functional in this year, adding easily about 250 odd rooms. And what we are realizing is that the capital expenditures plan notwithstanding, and capital expenditure has been incurred in the last year as well, and yet we were able to improve our cash balance situation, largely also because of the fact that we are focusing on our receivables collection and making members holiday, and that cumulative effect is what you're seeing, and we believe that is sustainable.
Mr. Singh, you know, for the longest time, a lot of grey-haired investors who invested in your company had multiple ways of approaching this asset, right? I mean, different investors approach investments differently. A lot of people were of the opinion that here you have a player which is debt-free, has own properties which are at such high in number, and at some point of time, all of those operating leverages will come into play, and you know, it's a multi-bagger in the making. Things haven't panned out in exactly the same fashion due to a variety of reasons. Do you believe over the next 5 years, or do you believe that the next 5 years can look materially different from what your previous 5 years have been like?
Okay, if you look at in the last 3 years, you know, whether you look at member additions in terms of growth, whether you look at the resort revenues, whether you look at our cost structures, there has been a significant improvement in all of these metrics. And we believe that we understand what it takes to build this business for the future. We do not comment on what stock market thinks about us, but we are very, very clear that our business model is robust. And you know, in hospitality, typically there are two problems. People have high debt and low occupancies or swinging occupancies. We have very stable occupancies. Last year we closed at about 85%. And as you yourself mentioned, that we have zero debt. So we are fully capitalized to grow our business. We continue to look at acquisitions both in India and internationally to grow our business. And I must say that while, you know, Finland is a very separate business, but we are realizing that the fact that we have 33 more resorts, 25 in Finland and 6 in Gran Canaria, Spain, and 2 in Sweden, also helps our member to holiday internationally through us directly. And of course, with RCI, we have access for our members for about 4,000 odd resorts. So really speaking, our international footprint is growing, our domestic footprint is growing. So as long as we are able to add resorts with different experiences, I don't see any reason why we can't keep on adding members, because our proposition, we are very, very clear, is truly differentiated, because not only we are offering amazing stay options in various terrains, whether it is beaches, whether it is backwaters, whether it is mountains, but it is also about the holiday activities, the experiences that we provide, including, we recently have launched a new product called Happy Hub in our resorts. We are ensuring that when children and family come together, they have good times, and that's what this Happy Hub signifies. It is more about engagement. We have a philosophy that when people come on holiday, they want to do things, they want to learn things, new things, you know, whether it's pottery making, whether it is, you know, any other skill. And they also want to connect with each other. So the whole idea of Do Learn Connect is being played out in Happy Hub, and we believe that that's what makes us very, very differentiated. And that is the proposition that we are moving forward, and we believe we are on a sound footing.
Your acquisition of members has also changed a bit, in the sense, if I just look at the last 6 years, your acquisition of members through digital and through referrals has moved up, if I'm not wrong, compared to what the proportion used to be, say, back in FY12 or maybe FY11. Can you take us through that? And if that is indeed the trend, does it lead to significant accretion on the EBITDA front over the course of the next 5 years?
So I must say that our focus on digital and referral now is 3-4 year old. We have approximately 48 to 50% of our sales coming through referral and digital. This is fairly stabilized. We have a huge Happy Family referral program which we promote amongst our members, and that is a grand success. We find a lot of members referring their families and friends to become members. As far as digital channel is concerned, the focus is to ensure that we do digital marketing and run digital campaigns to make people know that we are, you know, the #1 provider of family holidays. And what it does for us is it gets us the leads, and then our people can reach out to these people who have shown interest, and the conversion happens on the ground. So the whole idea of using digital and referral channel is to create a pull for the brand. These are pull channels. We believe that when we do these actions, it will help us to create pull for our brand Club Mahindra. And that is something that we are committed to. And this is not possible if the brand does not have the the aspirational appeal, it does not have the pull. So we are geared to drive this part of it. Coming back to the EBITDA question that you mentioned, I think if you may have noticed, our cost of acquisition are well in control, largely because of these actions. In fact, there have been marginal improvements that you may have already seen. And we believe that some of these channels actually take time to play out. For example, if you look at digital, in digital there is a lot of investment that needs to be done to constantly ensure that you are on your salient and people are looking at you. And the costs of the digital medium, while for the consumers are falling in terms of the bandwidth and the Wi-Fi and those kind of costs, but as far as the advertisers, or if I may say marketers, are concerned, for them the costs have not really been falling. What we need to do is to become very efficient in our digital spends. That's the act which is going on. We have a full-fledged chief digital officer who is busy with doing that. So we are investing significant in digital. By the way, we had launched our mobile app for our members, and that's also a lead generation source for us. So we are trying to strengthen that piece also. We are using the augmented reality, virtual reality headsets for our prospects to experience our properties. So digital is not just lead gen, it's all about using technology to create to communicate the right proposition, and also help the customer experience our product once they join in. For your information, 85% of our bookings now happen online. So members actually are able to transact, pay everything online. So these are the things that will help us to move ahead in a holistic manner.
But does it lead to 150, 200 basis points EBITDA margin expansion over the next 2-3 years? Is that a reasonable estimate?
I wouldn't want to say that, because EBITDA margin is a combination of not just the cost of acquisition. It's a combination of our resort costs, it's a combination of our overheads, and it's also a combination of what capabilities that we are bringing for the future. For example, even if the EBITDA margins are improving at a pure same to say, if you were to compare it like to like, but you may realize that we may be investing in a new product, we may be hiring a new skill, and therefore you realize that the EBITDA margins have not improved. So I think we need to, internally we are very comfortable with what we are doing. Of course, we strive to do more. And I wouldn't want to say that these are the routes to improve EBITDA margins. There are multiple levers to improve EBITDA margins, and we are pressing all of them.
Okay. Mr. Singh, I understand you're in a constraint for speaking about numbers. Maybe we'll talk about those numbers once your quarterly numbers come out as well. But heartening to know the confidence that you have over the course of the next couple of years. All the best with the member additions. And I hope that those numbers only improve with the quarters to come.